GM, welcome to the weekly outlook. This is where I take a high time frame analysis of the markets, looking at positioning, catalysts, and risks, as well as trade of the week to get you prepared for the week ahead. So, if you enjoy my videos, you appreciate content from a real trader, hit subscribe, smash that like button, drop a comment, let me know. Without further ado, let's dive into it, starting with Bitcoin. Now, if you guys watched the monthly outlook video I dropped for October, you will be familiar with this chart. So on the monthly, I took these boxes, and the red boxes are distribution. So it's the wicks on the monthly, which led to the sell-offs. That's why we know this area was distribution. That led to a 32% dump. You then saw accumulation, which led to the move up. And recently we had a distribution over here, which led to a 13% dump. And if I go to the weekly, it'll become a lot clearer to see. So we had a liquidity sweep over here, Trump's inauguration, that led to the move down. And then once price started accepting in the previous era of distribution, that shows that supply is no longer at such an imbalance with demand, which means if demand is accepting up here, price wants to go higher to find a new area where supply imbalances demand, because markets are here to facilitate trade. That's the function of markets. So markets will rise to find a seller and they'll dump to find a buyer. And right now we are rallying into that previous distribution here. So we're accepting in that area so far, and the weekly close is in 4 hours. So almost certainly you're going to close within this distribution zone here, and the more closes, as we saw previously, the better. Now we have swept the highs, but as it stands, this would be the highest weekly close we have seen on Bitcoin, even if we do close inside. So previous highest weekly close was around that 120K level. So closing above there would be solid, as if you go to the line chart, easy to see, this would be a brand new high on a candle close basis, which is good. But of course, wicks tell a better picture of what is going on. And wicks are important. So we have swept that all-time high. If we can close above, that would be a very nice signal, as that would be like this candle here. It's the breakout of this distribution. So currently we are below it, and really, as long as we stay above that highest weekly close around 120K, price should be good, as it's showing acceptance at higher levels, at a level where it previously couldn't close a weekly candle at before. So as long as you spend time above there, sets up for potential breakout higher. And if we start falling below 120K, then you have the idea of, was this just a sweep? And potentially you have a higher time frame topping pattern forming there. So keep a close eye on this for sure. And if we zoom in a little bit, we start to get a better picture. But on the weekly, looking at the EMA bands, holding the 12 and 21 EMA bands, they have now produced a new high, so they are being respected. And the support below that has always been the 50-week EMA. But as I said, while we're accepting in this distribution zone above 120K, so the highest weekly close, that should set up for a move higher until or unless we lose that highest weekly close. Then you're looking at, okay, potentially the distribution is actually continuing here. So that's what I'd look for from here onwards. And of course, if we lose this zone, then you're looking at the next zone where, again, you found distribution, but once we flipped it, that turns into support. Therefore, that's the next level you'd be looking at, and you start losing that, then it opens up your higher time frame, slower trend support, which we found support previously there. But more on that in the monthly outlook video. Make sure you check it out. Did a high time frame view of the cycle and what we could see. But focusing on the week ahead here, if we go back to the daily chart now, zooming in further, we closed above the resistance that I said we needed to flip. That led to continuation higher. We smashed all my targets. So we hit the all-time high. We hit that 123k level over here on the previous all-time high. Daily is, of course, not shaping up with the nicest candle as it stands. It's still 4 hours to go, so a lot could change, especially as we head into that CME Open. But currently, sellers have showed up as we tried to push up on a Sunday. We have taken liquidity, which, let's face it, is not the nicest thing to see. As a bull, it's much better when you leave the liquidity. You guys will know from many of my videos, I've talked about this a lot. When smart money leaves the liquidity, that builds up the short liquidations, which allows you to mark up through. Builds up the energy, which catalyzes the trend. It catalyzes the markup phase. Again, I show you guys this consolidation all the time. It was liquidity building. Every single high just left untouched constantly. Shorts building up. The stop loss is all building up. Then they get blasted through. Whereas when you sweep, you're more likely to distribute, as smart money has used that to fill their sales as breakout buyers. They get wrecked. Short stops, they get wrecked. Anyone shorting, they get wrecked as it wicks above. So it's just a bunch of liquidity getting generated there rather than, as I said, saving the liquidity for a bigger move to mark up through it. So it's not the greatest sign, but then again, this is going to entice a lot of people to short. They're going to be looking at this and saying triple top, and I think it's very easy, even if bearish, that we can see a new all-time high on Bitcoin. And what you're looking for here now, we've hit the all-time high, is what's the reaction? Because all-time high is the ultimate resistance level. Bitcoin has trended through the range here and it hit the last target. So while we're below that, we are below resistance. It's as simple as that. You get above it, that's the last level to flip, then sure, we're trending. It's as simple as that. So there are some signs that you'll see based on the nature of the consolidation and price reaction that we see here that will tell us whether this is more likely to be distribution or actually something that's going to lead to a further markup higher. So first of all, resistance to flip. Well, that's been flipped. So let's turn this to green now. And we can change this to support with a question mark because it needs to be confirmed. If we do pull back, that 120k level should hold as support on any dips. That should be the lowest the consolidation goes, because if we start retracing, especially quickly, then you're more likely to retrace the whole thing. And let me show you some paths so you can see what I'm talking about. So bearish path from here would be to immediately retrace Friday's candle in Monday or Tuesday or even Wednesday's session next week, because when you start retracing candles super quickly like you did here, you had a big pump up on Wednesday and immediately the next day got fully engulfed. That is distribution. That is supply outweighing demand drastically. And that means sellers are in control. And it's showing that price is doing what it's so often done above 120k, which is quick pumps up, which cannot hold, which lead to quick flushes down. Seen that over and over again. So you want to see the opposite of this. You don't want to see the red path, because that is then just going to be arrow number 4, where we're seeing that same price behavior above 120k. We need to see acceptance now above 120k. So to look at some other paths, there are really 2 other paths that we can see from here. And these are your bullish paths. So we can see immediate continuation high if there is just absolute strength in this move and there's just ripping demand. ETFs keep bidding and we just push higher. That can definitely happen, can see that path, and that really just starts with flipping the previous all-time high at 124.5k. Get above there, start accepting, then you're looking for continuation higher. And we're probably going to see that ripping markup rally continue on Bitcoin. Failing that, you're then looking at potentially a longer consolidation. So we'll get both paths up. either looking at immediate continuation high next week, or if we can't do that, then you're just looking at 120k. This should hold on any consolidation. And if price can just chop sideways, consolidate around this all-time high, that can be bullish and set up for higher. And this can, of course, come from here as well. So this would be even more bullish if the consolidation can actually begin at a higher level. But all in all, you're just looking for price to go sideways at the minimum, holding 120k. If we can consolidate from higher, then that's actually probably going to lead to a much higher move, a much more violent move, as it's showing more strength in it. So you're looking at immediate continuation or consolidation here next week. 120k is the level to hold. Don't want to see Friday's candle get immediately retraced. Otherwise, you're looking at the red path where you just see price action above 120k fail, and then you're looking at distribution here and probably a high time frame topping pattern. That is your high time frame signal, the best you'd ever really get, with a triple top sweeping, closing below 120k in a very fast manner. Again, not saying we can't come back eventually and later on just build a higher low. That's definitely possible, but I think that would be a much slower move if that does happen. What I'm saying is it's all about the price behavior. You don't want to see this fast, because that's volatility. And if you guys know from any of my lessons, any of my teachings, high volatility is a sign of distribution. Low volatility, where price starts coiling up like this before the breakout, that is a sign of accumulation. Look at this, coiling up, that is accumulation, leads to markup. What is this? Coiling up leads to accumulation, markup. Whereas all of this, look at these swings. You've got massive swings down, going all the way back up. Trump tweet this was about the strategic crypto reserve. That's a huge pump, then a huge dump, then a huge pump, and it's just volatile. This is what smart money do. They drop news, they drop tweets, because this volatile price action has dumb money, retail traders, bullish over here, bearish over here, bullish over here. So they're just filling their sell orders every single time. They're just generating so much exit liquidity as retail and dumb money. They're flip-flopping every single day, every few days, and that's how you generate a bunch of volume for whales to fill their sells. Because remember, whales don't sell when they can, when they want, they sell when they can. It's a different market for them. That's why they do all of this distribution and tactics to generate that extra liquidity. So those are the paths I'm looking at on BTC and levels. Above 120k is good. Otherwise, you just want to see consolidation, ideally from higher. And failing that, you of course can have continuation where we rip higher next week, but signal there would be simply just closing above the previous all-time high. And you can trade the momentum higher. Otherwise, red path would be the distribution bearish path. So that's what I'd be looking at strictly for the week ahead on BTC. Very simple. And go back to this chart, which I've been showing you guys all the time. Got these high time frame resistance levels, which been playing out. You flip them, hold as support, mark up higher. Flip them, hold as support, mark up higher. Flip them, hold as support, mark up higher. And we're now seeing the attempt to flip 110, of course, which has led to a move to new highs. But now we need to start flipping this level here, this high over here. We need to have the markup, because Bitcoin hasn't really had one of these markups in a while, almost a year. The last big markup was the Trump rally, the November-October rally, because the tariff rally was just a retracement. And then you've really just had this slow grind higher, which has been difficult for many to trade, of course. These easy mode conditions, you don't really get them often, because it's literally easy mode. It's so easy to make money while the markets are just going up only every single day. Whereas this kind of chop is what's kind of screwing people and leading them to making bad decisions or not getting on board, and overall becoming more difficult to trade. But that's expected as we get later and later into the cycle. So that's what I'm looking at. You want to see price flip above this level if it wants a markup. The only thing is we haven't really seen Bitcoin build a base. This has really just been up only, which is not what I wanted to see. Now, sure, if there's just immense demand for some reason, this can just continue higher, potentially. But really, in everything I've ever seen, rally-wise, you want to see price base build, especially below resistance. But now that we've taken the high, we've already hit the resistance. So from here, you need to see price start building a base and be able to go back to the highs. You don't want to see price start consolidating here because you've set a high now and then you're consolidating below it. You want to see price get above, come back below, but still be able to trade above, consolidate. And that's going to lead to move higher and actually set up some sort of base, some sort of reaccumulation that's going to trigger the energy, the cause and effect for a rally. Because otherwise, yeah, it's just been green up only. And the faster you go up, the more likely sellers are to appear, because just a week ago, Bitcoin was at 110K. Now Bitcoin's at 125K. Not everyone trades off charts, guys. Some people, they buy 110, and if in a few days they see it's at 125, they're going to take some profit. They're going to sell. And that's the opposite, of course, of building a base and slowly grinding higher. That's, of course, more efficient and what's going to lead to more sustainable rallies on Bitcoin. So definitely are some warning signs here. But as I said, as long as we're above 120K, Bitcoin is okay, despite it having moved up so violently. Therefore, just want to see 120K hold, and ideal scenarios is to start consolidating higher up and accepting in this area. So you want to see that base being built, essentially. Now that's it for Bitcoin. Of course, you want to look at Bitcoin dominance. What's going on here? Well, all Bitcoin rallies, as you know, if you are going to see a true markup above all-time high, you're going to see Bitcoin dominance rising too. The question is, how far can this chart really rise? Take some EMA bands. Potentially, we can see this go higher. I mean, it is basing out nicely. And you can at least see a rally to backtest this 50-week EMA, which we lost. It was previously the cycle support on Bitcoin dominance, but now we're below it. You can see a rally, again, even if this chart is going to go lower eventually, which would be good for Bitcoin, but honestly find it hard to see Bitcoin dominance just rallying to new highs if it's not with Bitcoin falling. Because remember, Bitcoin dominance rises off two scenarios. Either Bitcoin's going up more than altcoins are going up, or Bitcoin's going down less than altcoins are going down. Because Bitcoin, of course, has lower volatility. So often when Bitcoin dumps and flushes, you can see altcoins flush even harder, which leads to Bitcoin dominance rising. And I think that's really the only way this can go to new highs, because traders just get too excited at this stage in the cycle. Can't have nice things. But overall, it's strong. It's not breaking down. So that is the positive on Bitcoin dominance. And generally, if Bitcoin rises while Bitcoin dominance rises, it means new money's coming in and actual flows. Therefore, so far, so good. It's just a matter of how high can that sustain with Bitcoin USD going higher as well. Is it just a bounce to here before we then have to retrace? Or can we go higher? And that's really what you want to watch out for. Typically, Bitcoin's needed a catalyst to dominate all cycle, whether it's the ETFs, whether it's Saylor, whether it's the treasury companies or Trump presidency. So there's not really been a catalyst on Bitcoin, which is the one thing I'm thinking about. However, play the charts as they come. We are now breaking the high of September over here. So far, so good. And that's giving Bitcoin its strength. That's allowing Bitcoin to be at the highs. And the longer this stays strong, the more likely Bitcoin can actually have a decent breakout and mark up to new all-time highs. If it breaks this low, then almost definitely I think Bitcoin's going to lose momentum. And that's when you're going to see profits rotate into altcoins. But of course, you want to see profits rotate into altcoins as late as possible. You want to see Bitcoin at 140, 150 before profits rotate into altcoins, because there's more money to flow into them then. That's why you just want to see this chart go higher and higher as Bitcoin goes higher, because that's going to lead to the markup breakout that holds. But watch those levels. If we break 57%, you're probably going to see Bitcoin top out, and that's when you're also going to run. But as long as we don't, break that low and we can break up from September's high, then Bitcoin does have the green light to at least consolidate at the highs, if not break out higher. So keep an eye on that for your signal with Bitcoin. Now moving on to Ethereum. So these were the distribution terms on ETH. We're now starting to close back inside that monthly distribution zone. So starting to trade within it, which is a good thing on ETH. Of course, this previous distribution zone held as support on the dips between 3.7 to 4.1K. So you want to see that hold if we cannot accept in here. A few hours to go on the weekly close. So far, so good. But really on ETH, we go back to this plan. What have we got? So for resistance to flip, you see Bitcoin has flipped its respective resistance, whereas ETH hasn't here. So again, it's good to see Bitcoin's dominating. ETH's not stealing all the attention, because that leads to Bitcoin weakness typically. So since this resistance hasn't flipped yet, you're just looking to see, okay, where can support show up? So you have this interim support level over here. That's between 4.2 to 4.3K. If we see any dips, of course, going to be heavily dictated by Bitcoin, then you're just watching for ETH to hold above this value area low within this interim support, and that can build that nice higher low. So you got that higher low structure building through the range, which would be bullish on ETH and potentially set up a nice rally for later on. If we can, again, as I said, build a base, build something constructive rather than, of course, just marking up, because then you're just going to top out as quick as you ran up. What comes up fast goes down fast. But if you build a base and come up slowly, then you can actually see a decent attempt, a decent markup. So just watching your support zones. Can we form a higher low here? If we do dump, if not, your last support, of course, is the high time frame support resistance level. Has confirmed the reversal, set a trap here. So it is bullish since we reclaim the range. But now you're just looking for, can we find support here? Or if we don't, do we just flip resistance straight away? And then once resistance is flipped here, you're looking to see ETH make a move to the all-time high, and then does it reject, or do we flip it from there? Because previously, above this 4.640 level, this value area high, we've rejected, can barely stay above there. So if we flip that, you want to see price stay above there, and that can trigger some nice longs to the all-time high, and from them, you assess whether you break it or whether we're going to reverse from there. So ETH not getting the attention so far. Maybe that changes soon. Keep an eye on Bitcoin dominance. ETH is having a decent setup here since it's reclaimed the range. So you just want to, again, see bases start to build here. And that really is it when it comes to Bitcoin and Ethereum. So if we check some other charts out, check the total 3 chart. What have we seen? Well, these were the distribution levels and the accumulation levels. Go to the monthly, still trading within that distribution zone, which we previously haven't been able to trade in. We're above the highest ever monthly close on total 3. So this is your index for altcoins, everything outside of Bitcoin and ETH. So it gives you a nice gauge. And really above 850 billion is going to be very bullish for altcoins if this chart can stay above there, because that's going to be the highest ever monthly close. Of course, 26 days left, a long time. But the more acceptance you have above there, the better. And that really is potentially going to set up this chart to break out if we can start accepting in this distribution zone over here. Because we have held the 12 and 21 EMAs. We have built a nice base and are coming up. So invalidation is losing 826 billion. So losing this distribution zone here on total 3. And your hard invalidation is losing the 12 and 21 bands, which have been respected so far. Don't want to see them get disrespected. That leads to flushes. So while those two triggers, those confirmations hold, that is basing up for a move higher, potentially to all-time highs. And from there, you can reassess. And when we check out the chart here, I know I analyzed altcoins in yesterday's altcoin analysis video heavily. We've seen something nice here where this previous high, which we tried to break above, set a trap. We now reclaimed it. And of course, the invalidation of a bearish setup is a bullish setup. So this again is your level intra-week. That is 858 billion. You want to hold this level, stay above it, because if we can stay above it and not flush down like we previously did before when we tried to break out, then that's a change of character. It's a trend shift. We're now above it, that's going to lead to new highs. Because previously we couldn't accept above it, and that's why it leads to the flush. But the flush, of course, found a lovely higher low over here. So setting up pretty nicely. Just want to see it hold above 859 billion essentially. This high over here, which we previously set a trap at, and if we can hold that, that's going to lead to continuation higher and breakouts on your altcoins. So be watching this chart, and it will be a similar story with others. So everything outside the top 10. This is a little bit weaker, so you're seeing total free is stronger than the others chart, because look at this. It's set the trap and it hasn't been able to reclaim the trap. So this is the equivalent trap on all coins outside the top 10. We tried to get above it, but not accepting above it. So that can potentially lead to chop and further bleed on some of your higher risk and lower cap altcoins. And that is really showing that a lot of the flows are going into those major altcoins. It is Ethereum, BNB, Solana, even XRP, those bigger coins that are getting the attention as opposed to the more speculative coins. And that's been the game of the cycle. It's been being able to identify the winners. It's just been sporadic pumps across altcoins, and you can't just long anything. You have to be selective. So make sure you look at your indexes. Is your coin also below its trap level? Or is your coin above its trap level, like BNB is, for example, breaking out? That's going to show you where the relative strength is in your altcoin versus other altcoins, which therefore shows you where the big demand is. So that's really everything when it comes to crypto. When we look at gold, marking up, of course, beautiful consolidation here. We've now had a lovely breakout, so gold just chads higher. It's trending. Bitcoin is not trending. So let's get them side by side. You can see Bitcoin is just at the highs. It's at its range high. So Bitcoin equivalent is like over here. The equivalent of Bitcoin right now is this over here on gold. So the question is, can we build that base, build that higher low to then break out and go on a trend? Because at the moment, this isn't a trend. This is a consolidation on BTC. We've seen the strengths in gold, the strengths in stocks. So the question is Bitcoin just lagging? Is Bitcoin just going to catch up now? That's been everything I've been talking about. That's been what to watch. Or is gold just going to keep marking up higher and not allow Bitcoin to have the attention? And when you look at the gold Bitcoin chart, that becomes important. So get it up over here. What we are seeing is so far a rejection of this high. So mentioned in the monthly outlook how you want to see which side breaks. Is it the low or is it the high over here? And that is the low and high, of course, of September. If we break above, then that's going to allow Bitcoin to rally and have momentum. As you can see, guys, pull out the weekly chart on Bitcoin. The major top on Bitcoin was when this chart topped out. The major bottom on Bitcoin was when Bitcoin against gold bottomed. So you're seeing weakness in this chart because Bitcoin's at all-time highs, whereas this chart is not at all-time highs. So gold is stronger than Bitcoin currently. And that's why I said you need to see that start to revert if we're going to actually see a markup. This is another signal to look out for to see if we're actually going to have one of these rallies, which does just mark up away. And that's going to be told through this at least breaking above the September high. And if it's bearish, it's going to break below the September low. And that's probably going to lead to the red path on Bitcoin and distribution further. So that's what I'm watching. Can gold finally just consolidate and allow Bitcoin to take over and be the higher beta asset? Or do we still need to wait for that? Or potentially is this going to break down and lead to distribution and form a top? That's what I'm looking at carefully. So what side does this chart break? Bitcoin against gold. And it's a similar story when you look at Bitcoin against stocks. So this is Bitcoin against the NASDAQ. Now this is better. This is more positive. We broke the high of September. So against stocks, Bitcoin is having some strength here, which is good to see. Now you just want to see, can we make a new all-time high? against the NASDAQ, that would show real strength in Bitcoin and show that money is flowing into Bitcoin over stocks finally, because that's not been the case for some time now, which is why you've seen Bitcoin go sideways. While something like the NASDAQ, so tech stocks, they've been marking up, they've been trending, while Bitcoin has been literally going nowhere. It's just been in a range between 125 and 107. So you want to see that revert, and that's going to be shown through that chart I showed you guys. So it's going to be shown through this now breaking above all-time highs, which is going to give, again, Bitcoin more strength to mark up rather than distribute and form a top here. So key to look at where capital is flowing on a macro level to see if your rally is going to have real strength. But again, look at all the big Bitcoin markups. When Bitcoin was marking up on the Trump presidency, this chart was breaking out of its trend line over here. I remember trading this live, looking at this signal here. So literally on this day, when this chart against the NASDAQ broke out of this trend line, that was almost the perfect place to get long. No downside, just for a straight rally up. And of course, this kept breaking out. That's because money's flowing into Bitcoin over stocks, and that allows Bitcoin to mark up higher because there's only so much liquidity, guys. Money really does rotate between all the assets. Markets are all correlated and they all function as one big pool of liquidity. So they're the signals to watch for Bitcoin strength. And that really is it when it comes to the markets. So quick look at stocks. As I said, they're just going to all-time highs. So looking at the S&P, strong, making new all-time highs every day. When we look at low cap stocks, so this is more interesting. You want to see what's going to happen from here. Are we going to mark up, or are we going to find resistance at the 2021 cycle top, the 2024 altcoin craze top? This is your low cap stocks, which are like altcoins in the stock market. So this can mark up higher. It shows risk appetite's back. It's going to be great for your altcoins. If this rejects here, then you're looking at further pain ahead. So key to watch those low cap stocks to see how investors are feeling. Now that is it when it comes to the charts. So let's take a look at positioning. What are we seeing? Well, Bitcoin volume is finally overtaking Ethereum. If you remember, for weeks, Ethereum volume was higher than Bitcoin. For weeks, the open interest was much closer, but now you're seeing Bitcoin take stage again, which is what you want to see. Good to see. And Bitcoin, go to the daily chart here. As I've been mentioning to you guys in almost every video, you're seeing that we tried to break down below this range low over here. Let's get the full chart up. While open interest stayed flat, so longs did not close when we broke down. Didn't close when we broke down, and that's okay if you reclaim the range. As I said, literally on that day we reclaimed, and we did. Which, as I mentioned, puts pressure on the shorts, and boy, have shorts got squeezed out. We now hit the final liquidity target, haven't we? So you've got a big build-up of open interest recently. So we've seen open interest up 17%. Price at the same time is up 12.79%, so slightly outpacing open interest, and we have hit the all-time high liquidity. So there are definitely longs built up here. You would have seen this go red and break down if there was just a short squeeze to target short stops. So there is signs of leverage coming in here, and definitely think we can see some flushes this week. As I said, 120 is really that key level now to see consolidation remain above. It's not a level we've been able to close above on even the daily. We had one close above it, and since then we've now had three. So we want to see it remain above. We don't want to see it close below 120 because that can open up flushes to wipe out some of this open interest here. So taking a look closer at that, what are we seeing? Well, here's the rally on Bitcoin. Let's take a further look, a closer analysis. This leg from 114 to 120, price went up 5.5%, whereas open interest went up 0.45%. So that shows it wasn't futures led. Spot were supporting the market, and of course spot bid is super important. That holds up the underlying trend. Otherwise, leverage gets too excited. And if the underlying asset is not being bidded, then leverage can only hold up for so long. So this was a bullish portion of the rally. Price up 5%, open interest up just 0.4%. So shorts are getting squeezed, spots bid in price. This is your smart money and higher time frame thinkers. Then you see a rally up 1.8%, open interest up 1.7%. Now you're seeing more of your short-term tourists come in with leverage because this is equal. So you can see that it's more futures led than previously. And again, this recent move up, price move up 2.2%, open interest up 1.45% in the same time. And then even open interest kept building and building even while price went nowhere and flushed. And you can see longs got flushed out, trying to capture some all-time high breakout on a Sunday, got too excited and they're bleeding out the open interest now here. So you have still a build-up, which can definitely get flushed this week. You got price up 0.3%, open interest still up 1%, so outpacing price. It's futures led right now, which is not what you really want to see at all. And what does this mean? So where could we go back to on a flush? Well, typically you go back to where the spot demand was present. And spot demand was present, of course, in this leg here. So it was everything from October 2nd all the way back to October 1st. This rally here between 114 to 120 was fueled by spot demand rather than leverage. So if the leverage gets flushed out, you want to see, again, that 120 area, this general zone in this rally, hold on dips because spot buyers should show up again there if price comes back there, if it's going to be strong and if there's demand. So very key zone to hold if we do have to flush out leverage lower. Do spots show up here again? That's the question you've got to ask. And if they don't, that's a show of weakness. That's going to be more likely for this chart to then be topping out here, as you're seeing the sweep, as I said. However, if we can just hold this and spot demand does return, then that's going to form your base to then consolidate and potentially set up a higher move later on. So definitely some leverage here. If we see flushes, watch the 120k area to see if spot demand returns on BTC. That's it when it comes to positioning. So next up, catalysts and risks. So FOMC, traders are now pricing an 86% chance of 2 rate cuts left in 2025. Of course, we have a meeting, I believe end of October, and we have a meeting beginning of December. So only 2 meetings left. They're expecting a cut in each one. Just a week ago, this was 65%, and a month ago it was also 65%. So only recently have traders really upped their estimates on a rate cut, which has, of course, led to these rallies in the stock market, on Bitcoin, on gold. This gets priced in ahead of time, so you're really watching any changes on these interest rates and how that affects the market. Of course, government shut down right now. That can take some time to sort out, but once it's sorted out, you're going to get economic data come in. I know some has been postponed, like non-farm payrolls, unemployment rate meant to be last week. Now it's changed to this week. So keep an eye on those economic events if they do come out and how this affects the FOMC interest rate probabilities. But there are some other things. There is headline risk around all the wars that are going on right now, around, of course, the government shutdown. That can also lead to potential flushes or potential pumps even. Who knows? Maybe there's a catalyst. And if there are headlines, it's going to be very insightful. Remember, it was Trump's inauguration that topped the market, January the 20th. Therefore, if we get bad news but price fails to dump, that shows demand. Or if we get good news and price fails to pump and mark up, well then you're very likely to be in distribution because that tells you what smart money are doing. How are smart money using the liquidity that's being generated from the headlines? That's what you got to watch in the charts because that tells you whether they're accumulating or distributing. So watch out for those signals. I'll keep you guys updated, of course, in morning markets every single day in my daily updates. Now, finally, trade of the week. So, of course, we have the red path, which can play out. As you guys know by now, trade of the week doesn't mean this is exactly what's going to happen. It's just if I see this, this is potentially how I'll look to trade it. So ignoring the red path, that wouldn't be a path I'd be too interested in trading. And that, of course, is triggered by losing 120K early in the week. So retracing this rally very quickly. Barring that, green path, if we can flip the previous all-time high at 124.5K, hold it. I think that leads to momentum continuation higher. That will be seen if there just is insane demand, Bitcoin dominance is rising, gold starts consolidating, stocks start consolidating, and you see Bitcoin having strength against gold, break above the highs. That's what going to catalyze your markup, as I showed you guys in previous price history. It always is what catalyzes it, as that leads to flows going into Bitcoin. And flows going into Bitcoin instead of the stock market and gold is what allows it the attention to mark up. So that's the green path. Flip that all-time high, hold it, then I'd look to trade momentum higher, because if we're gonna accept above the previous all-time high, then we're gonna mark up. That is the scenario here. But that's why you wait for the trigger first of accepting above the all-time high before you start to look for these trades. Because we could get the orange path, as I said, could just consolidate here. And what I'm then looking for is, does 120K hold, and find that spot bid again, as mentioned in the positioning section. And if the spot bid does arrive, then I'll be looking for low time frame signs of structure holding and look to get long within the consolidation. And this consolidation can, of course, be from higher. Doesn't have to hit 120K. The higher, the better. If we consolidate around 122 to 125, that's going to be much nicer. Let's set up a base that's closer to the markup, so would be a show of strength. Either way, looking for some sort of low volatility consolidation. That's the point. If that is forming, then I'll look to get long on a swing basis to, again, trade to a markup for new highs. Red path, of course, as you saw, is high volatility, and that's why I wouldn't be looking to trade that, especially not on the long side. So that is the weekly outlook. Hope you guys enjoyed this one. I'll see you in morning markets tomorrow. Again, smash the like, smash a comment if you made it to the end. Hit subscribe. Let's help boost this channel. I know you guys love the content. Appreciate all your comments. I read them all. So ask me if you got any questions, and I'll see you guys in the next one.